Hey everyone, welcome to a new episode of the Weekly Wizard. I think we are at episode 6 now, and today I have with me the probably the most famous Dune Wizard of all time, which is Richard Chen. You might know him from his OpenSea dashboard or DeFi usage over time dashboard. It's a pleasure to be able to chat with you, Richard, and welcome to the show.
Yeah, thanks for having me on, Boxer.
If you can just quickly introduce yourself, I think you're a man of many talents.
Yeah, sure. I'm a VC. I'm a general partner at One Confirmation. We're a crypto native fund, seed stage fund. So, some of our investments include like the seed rounds of OpenSea and Super Rare, Nexus Mutual, layer ones like Polkadot and Cosmos. Um, yeah, so just investing in trends early on, and a lot of that's really informed by the Dune wizardry that I spend a lot of time on. Just like trying to cut through the Twitter hype and see what are products that people are actually using and make bets on those before they become obvious. So I first got into Dune. I think December 2019. Like I think on the Wizards page, there's like a list of like your start date.
Mhm.
And I actually think the very first query I did was OpenSea, and like Frederick helped me a lot on that query. I had like that was back when the Dune support chat was. It was that was before there was a Discord. So like all of Dune support was just like a Telegram chat with Frederick and Mats, and then Mats, he was like coding. Like he's the only one who's technical, so he was like spending like 12 hours a day coding the website and also like answering all of our support questions. So those were interesting times. Yeah, and the first query I did was on OpenSea's volume because I was kind of writing a report on NFTs and like OpenSea, and Frederick helped me with that. So it's
Yeah,
been a long time. It's been a long growth and journey of Dune since the early days.
yeah. Um, how long has the fund been in operation for? I guess.
Yeah, so we started in 2017. So we were really like one of the first crypto VC funds. So like back in 2017, pretty much all the other funds were hedge funds. That whose goal was like to trade cryptocurrencies, but we wanted to take like a long-term disciplined approach and like back founders, work really closely with them post investment. So we were really the first ones that are structured as a VC fund, not a hedge fund.
Yeah. Um, so you just mentioned that you are getting a lot of your alpha from Dune, and maybe um, just to like get a perspective on how you view the market. What are other good information sources that you're using usually?
Yeah, outside of Dune, I think let me see, Token Terminal, because they have mainly it's like the PEPS stuff. That's
Hmm.
it's like these have that already pre-calculated for you. Um, I use Glassnode, which is good for layer one stuff. So if you want to like internally, one of the metrics we track is like to track Bitcoin or ETH adoption as a store of value. We'll track like the number of wallets that own at least one ETH over time. Um, and like Glassnode is good at getting is good at getting layer one data because if you try to do a query on Ethereum transactions in Dune, then it times out. So Glassnode's good for layer one stuff. And then I actually contribute to a repo called I maintain a repo now called Awesome Crypto Trackers on GitHub, and it's just kind of curated list of different dashboards for like each different project. Am I able to share a link or somewhere? Probably in
Um,
the YouTube chat. I could probably do that.
yeah, I
Okay.
think you don't have access to the chat to this platform.
Okay.
But you can post it in private chat here, and Thomas will take it. Will take it to the YouTube chat.
Cool. I just
There
posted
should
in
be
the
a
YouTube chat,
private
so I
chat
think
somewhere.
think
Yeah.
people can see that. But yeah, and then it'll be stuff like crypto fees and um, various stuff for each project.
Okay, I see. But other than so that's your data diet pretty much.
Yep.
But where are you like getting information on the industry, or like how do you keep up to date? Because there's like in traditional industries, like you probably read Financial Times or something. Like, how do you like? What's your information diet on that front like?
Yeah. So it used to be Twitter. Twitter used to be good at it's like mainly the links of like when projects do announcements, but then like Twitter got pretty noisy during the bull market. There's a couple of curated feeds I like. DeFi, like 2 Telegram chats. DeFi Prime is good. The other one's The Daily Ape by Darren Lau is another good one. And then newsletters. So I think I'm subscribed to Week in Ethereum News, The Defiant, ETH Hub, NFT Now. Those are the ones that I can remember off the top of my head. But yeah, I'm subscribed to a bunch of email newsletters as well. So among all of those, I think there won't be like a project like Medium post or Mira post announcement that like I'll miss.
That sounds like a lot of stuff to read.
Yeah.
But that's kind of the name of the game, I guess.
Yeah. That's like a big part of my job actually. Like what I spend a lot of time on, just like keeping up to date with the industry. Yeah. So there's a lot of stuff to read.
Yeah. A lot of stuff to research, read, whatever. So I guess a lot of your day is spent just like researching and reading then.
Yeah, and then most of the day is spent like on portfolio stuff. So I think one thing that differentiates our fund compared to other funds is we have a pretty small concentrated portfolio. So we spend a lot of time like helping founders working hands-on. So I get like 20 to 30 Telegram chats every day. And just like random requests, questions that founders have, asking for intros to other projects, things like that.
Okay. So yeah, that was actually I was just about to ask that question. But what does this like operational support or kind of like this? I hear that a lot about one confirmation. If you like read on Twitter, like there's like I've seen quite a few like one confirmation appreciation threads where it's like one confirmation are like really like in the weeds with the founders. But like, can you like share a concrete example if you can like somehow like how you actually like help projects?
Yeah. I guess, let's use OpenSea as a concrete example, because we've been working with them since 2018, early 2018. So external stuff like the Dune dashboard, obviously, that's been like hugely underrated for marketing, and like the press will always like quote the Dune dashboard, like even like the late stage VCs, who like when OpenSea goes fundraising, they know me as like the Dune dashboard guy for OpenSea. So it's that. In the early stages, like before OpenSea had product market fit, it was more of just like brainstorming creative ideas of like what new partnerships, product lines that OpenSea could do. So it was like a lot of intros and thinking creatively of like what things they could ship and launch. Post product market fit, their biggest need has changed to hiring and growing the team. So a lot of it has been on recruiting on our network and also interviews, especially with executive hires. So oftentimes we'll like source hires for like executive candidates, like say like chief product officer or something, and we'll also like do like an interview. So like Dev and Alex can get like a third party opinion on them.
Yeah, that sounds very helpful. And also sounds like a very cool job.
Yeah, there's a lot to do.
Yeah. So recently there has been kind of this rise of the like non-traditional VCs. So there's Tetra Node in the space. So he's this giant whale who has like a lot of power behind him. How do you think about traditional VCs and those kinds of like crypto anon networks? Do they work kind of in the same way, or like can the crypto anons even like provide something more because they're not as limited, I guess, or like because they can spend more time on individual projects?
Yeah. So there's several buckets. When you say traditional VC, there's several buckets when that's like within that. So there's like the Sandhill, like Silicon Valley Web2 VCs who are like now getting to crypto. My main concern is this like largely due to FOMO. And I saw this in 2017 is like they were just like excited about crypto and then just like kind of disappeared and like stopped being really responsive to founders like during the bear market. And actually, like when OpenSea was raising their Series A, like they got a lot of interest from Web2 VCs, but from reference checks, like that's kind of what the experience has been like with them. And then there's like the crypto native VCs that I know we fall in that bucket. I think those are the ones. If you find the ones that think long term and like are strictly doing venture and not trading, then those are generally the most helpful investors. And then recently, I think we're seeing the rise of trading shops. So funds like Alameda, Three Arrows that are getting into VC. Except, I guess what a lot of founders don't realize is they're really at the end of the day they're traders. As soon as your tokens unlock, the vesting schedule might be like 3 months, and like as soon as your tokens unlock, then they'll start dumping, or they'll get your token listed on FTX and then like also start shorting your token, so they hedge their investment position.
Yeah.
And then with the anons, a lot of that is like also like traders or people who've like gotten really rich quick and are like looking to get into like private deals. Um, the few exceptions with the nons I've heard are helpful are actually NFT whale collectors, where the interesting thing is like they're a non-online, but they're actually doxed to like most people.
Mm-hmm.
Oh, well, not most people, a lot of people in like the NFT industry, and like they can be really helpful, especially if you're building a product that's going to cater towards like NFT collectors.
Mm-hmm.
So that's kind of how I see the investment landscape shape out over
Yeah.
time.
Yeah, I see. So, what do you think makes projects give allocations to shops like Alameda or Three Arrows? Is it just to have the name on the cap table? Is that like kind of a signal of value?
Various reasons. One is, I guess, it's kind of an adverse selection of founders who like probably don't know the history of, well, like haven't like reference checked like other founders that like those shops have like worked with. Another thing is like, Alameda is obviously very heavily invested in the Solana ecosystem. So I have heard stories of like if you're a project building in Solana, you kind of get strong armed by Alameda to like take their money. Um, but like they do help, they could help with like some stuff like market making, and others if you're a DeFi project.
Yeah, I see. Yeah, all right. Very, very insightful. So I think, yeah, let's jump to the next topic, which is basically, I have a very spicy tweet of you that you sent out yesterday. So let me just share my screen. So
Oh yeah,
I think
yes, this tweet.
yeah. So for those just listening, Richard posted yesterday some interesting Dune shenanigans lately. Some wizards were paying for stars. Those have been rucked now. Yes, we see everything. We are mentats. Like, don't fuck with us.
Yes.
And then there's also the second point, which I think is more interesting in terms of this conversation. A founder asked a wizard to take down a dashboard because the on-chain metrics were embarrassing relative to Twitter hype. So, are you able to share what dashboard got taken down yesterday?
Naming names. Well, for both of them. Well, for the first one, I think it's pretty easy to know who it was. If you just look at the, if you check the list of like
Yeah.
top wizards now, and you'll see like one who's noticeably missing. And the second one, I guess I'm not going to name names just because it's a rumor right now, so I don't want to like say as if it was like confirmed to be true. But yeah, that's what I heard. And then when I went to look for the dashboard, I couldn't find it. So I'm actually like doing my own queries, working on my own queries for that project right now because I'm curious what the actual numbers are. So I guess I don't know if you can search a wizard's profile by like most recent queries that they worked on. So if you do that, like I guess that's an alpha leak, and you know which project I'm talking about.
Yeah, if you don't have them private, I guess one could look.
Yeah.
So yeah, but I think there's some like very interesting point here. In there's really no hiding in this industry.
Yeah, for sure. And I think it was Element Finance, right? That like they raised their Series A just from a Dune dashboard with like no pitch deck, and like that's the beauty of it is that you show them you have traction, and you don't need to have any other fluff or like try any like sales tricks to do a fundraise.
Yeah. Has that happened to you as well? Like, have you had a pitch where there was just a Dune dashboard yet?
I don't think so. No, I mean mainly because we're investing seed stage, so it's a lot of stuff is like still pretty early,
Yeah.
pre-product. Yeah.
Yeah, I see. But yeah, love to hear that development of yeah. It's like if you have good data that you can just provide, like why not just tell the story of your protocol with data? It's the most obvious thing you can really give to the potential investors.
Yep.
Yeah, all right. So much for the Twitter drama. So kind of unresolved, but people will know where to look.
Yeah.
So last week, or I don't even know how many days it has been, but in recent times there has been a problem on OpenSea, or not a problem on like it's not OpenSea's fault like at all actually. But there has been a phishing attack on some OpenSea NFT users, and they were basically the whole case boils down to some people clicked on a phishing link, signed a malicious. It's not a transaction; it's a signature.
Signature. Yeah.
On the Ethereum blockchain, and an attacker then used that signature that was not published on chain until that moment to basically rock a bunch of NFTs from a bunch of users, and that basically lends itself very well to discussing a bit like self custody. So self custody basically describes the that we there is no bank in crypto. You can't like you are the last instance of owning your funds basically. And I guess you must have thought about this quite a bit. So like what do you see are the challenges, and maybe how we could solve these challenges?
Yeah. My advice is like to have like two different wallets. Like one is like kind of what you use to like do transactions, and the other one is like your cold storage. So you'll notice a lot of like big collectors, they'll have like an underscore vault username, because like they'll buy their Bored Ape with their normal wallet and then just transfer it to that vault address, and then that vault address like doesn't sign any transactions or like interact with any smart contracts. And I think that that's like a good security like OPSEC way to do things.
Yeah, okay, I see. But if we want to get to a like I don't know how many million users we are in crypto now, but if we want this to really go mainstream, I think that sounds like a very like complicated approach for normies. Like if I was trying to explain this to my little brother, and he was like, "Why do I need like what is all of this?"
Yeah.
Maybe what kind of like user experience and user interface changes would you like to see, or like who do you think can really make this happen?
Yeah, I mean, this is true like outside of NFTs, like, even with cryptocurrencies, where like the vast majority of users will leave their coins on exchanges just because the user experience is like easy, and quite frankly, like they're not like as sophisticated to know how to self custody, and they're like more likely to like shoot themselves in the foot doing something. So you're like trusting like Coinbase Vault to like secure your coins, and you know, if the exchanges get into the NFT space in a meaningful way, like that's one advantage they have is they can be custodial. And then the second thing is like they own the fiat on ramps, the like the onboarding from like US dollars to NFTs. Um, so yeah, I think exchanges like have that advantage of like being that bridge between like purely Web3 crypto natives who know how to like use ledgers, MetaMask, self custody, have good OPSEC, and then like just the normies like that want to get exposure to NFTs.
Yeah, but so basically, we all don't know how to solve these issues, and for the meanwhile, it seems to be that these custodial exchanges will still like mostly get the market share of the like non experienced, not experienced. Yeah, the non like Web3 native people, like they just feel more comfortable on Coinbase. That is basically your.
Yeah, yeah.
Yeah, okay, I see. How do you think? Yeah, I don't know if you can talk about this, but probably OpenSea and Dharma Wallet. That will probably like be an easier avenue for non Web3 native people to also get exposure to NFTs on OpenSea, because Dharma will have there will be a very clean integration, and however that looks like is yet to be decided.
I know OpenSea is working on fiat on ramps. Like that's one of the big priorities right now, product wise. So it'll be easier for non Web3 natives who don't already have ETH and MetaMask to onboard. And then for the custodial stuff, so that's hard to do mainly because of like regulatory reasons. Like Nifty Gateway is another NFT marketplace where they're able to be custodial because their parent company is Gemini. So they kind of piggyback off of Gemini's licenses and like their compliance program there. But for OpenSea, like there's a lot to invest if they want to be custodial.
Yeah, okay, I see. Yeah, so self-custody is hard. But what might be some of the benefits that people have?
For self-custody, it's just like trust. It's like this actually happened with topshots on Flow. Is like some users like got rug pulled because their account got suspended. They like spent like 5-6 figures on NBA topshots, and then their account got suspended. So their NFTs basically all got rugged. So if you're then like this is why I also see on like Nifty Gateway is like when people will buy like a 6-7 figure NFT on Nifty Gateway, they'll immediately withdraw it from the exchange and into their own like self custody wallet because like with that amount of value, you don't want to risk the exchange like rug pulling you for like whatever reason.
Yeah. Has there ever been a resolvement of these NBA Top Shots? Or like, first of all, do you know any of the rumors why these accounts got suspended? Were they shit posting in the chat or like?
I don't know. I know that there was a blog post a while ago, like just like one of the persons who got rugged, and then he kind of explained like what happened with him. But yeah, I don't know if it's been resolved.
Okay. So not your keys, not your crypto, not your keys, not your NFTs as well.
Yeah. Oh, I found the post. Let me share that in the chat.
Yep. So yeah. We're gonna jump topics again. So I think it's very interesting that OpenSea is as dominant as it is. And I have a query somewhere. Oh, that's actually not the query. We'll have to do this without a query. The query was too simple. There's this one wash trade of OpenSea in there, and it rucks the whole chart.
There's the query dashboard of like looks volume, like filtering out the wash trading.
No, I was trying to whatever. Doesn't matter. So basically, I just wanted to get your take on why has OpenSea gained as much market dominance as it has? Because in the beginning of 2020 or end of 2020 actually, it shortly looked like Rarible might be the go-to marketplace.
Yep.
How do you think, like, what were the factors that made OpenSea the dominant platform?
Yeah, so the biggest reason why OpenSea is defensible is a search and discovery. And 99% of the engineering work on OpenSea is spent on a front end, so like having better search features and also like infrastructure. So hopefully the website doesn't go down like that often now, which is very different from like say take Uniswap for example, where like most of the engineering work is done on the smart contracts, and the smart contracts are open source, so anyone can just fork the contracts and then like launch a yield farming program on that and like see a lot of market share and volume from Uniswap. Whereas if you want to fork OpenSea, I mean sure you can fork the Wyvern contract, but then you have to like be able to have a good front end where you can filter all these collections by their attributes, like filter Bored Apes, CryptoPunks, Meebits by each of the different attributes. And the interesting thing about NFT metadata is that the format is not standardized. So a lot of this stuff has to be done manually. And like OpenSea has a whole team that manually like verifies collections, being like filters NFTs by attributes. So like art blocks was one that like lacked any filtering for a very long time because each art blocks collection, generative like collection, had to be like manually filtered. And like that just creates a big defensible moat because a lot of like support and engineering hours has to be spent on doing all of that. It's also like how CoinGecko has a big moat there because whenever they do token listings, there's a lot of data such as like what percentage of the fully diluted supply is circulating. Like they have to get that data from a team, and like that's off chain and more proprietary, and it's just very hard for other projects to replicate that. And like this is like why OpenSea has been pretty resilient against like vampire attacks and competitors, just because it's non-trivial to have to do all this front end integration work.
Yeah, I see. One thing that I quickly want to throw in here, wouldn't it be great if the like non-diluted and diluted supply of CoinGecko would be open source data? I'm so saddened that there isn't like a public database that Dune, Nansen, Flipside that we could all share, because I think that information should really be public. And if anybody from CoinGecko is listening, please, please make it public. But maybe it's just
especially the methodology, because it's basically like the team just sends CoinGecko a list of wallets to exclude it from the circulating count. But like, what are those addresses? So it'd be helpful if that were more transparent.
Yeah, and imagine if we could track Alameda and Three Arrows and all the other VCs in the space, how they hold and how they dump tokens. It would be would be very much solar punk future.
Yeah.
Recently there has been Genie and Gem, so NFT aggregators, and I actually have charts for this. So let me open this up. So this is how the space currently looks like, and this is the aggregated volume in a day, and Gem is the orange bar here, and Genie what color is this? Purple. And but it still looks like OpenSea is still doing a lot of the volume by themselves. If you visited Gem especially, I think the user experience of Gem is actually almost better than what OpenSea is offering. So how do you like? What's your look on the NFT aggregator market in general, and how do you think it could shake things up in the like big picture of all of this as well?
Yeah, right now I think like OpenSea still has like 90 to 95% of like the volume on a daily basis, right?
Yep, it definitely looks like that.
Yeah, I mean, like Gem's been doing like a great job of just like adding new trade execution features. So like you can sweep the floor, you can like dynamically adjust your bids. So they're really innovating on the trade execution front, which they're able to do because they have their own custom smart contract, where like OpenSea, they've been using the same smart contract since 2018. But like in terms of like, as an aggregator, you're supposed to be like a routing protocol where you route to like many different exchanges. But I think the vast majority, like from the data I've seen, like still goes to OpenSea. But they're just offering a good experience from like the trade execution stuff.
So do you think the rise of aggregators will continue, or is it maybe the case that Web3 native folks who like sweep floors, who are like very eloquent in their trading basically, and very like, I don't know, they're just keyed into the market, but the vast majority of users will still stay on the usual like OpenSea front end? Is that maybe the thesis?
I think aggregators make sense when the market is fragmented, and each venue, each exchange is like pretty commoditized. So there's actually a really good Dune chart. It's actually Frederick's dashboard of as like the DEX metrics, and you can actually have I could probably screen share.
Yep.
Let me try to find it, but it basically I have a share of like aggregator market share of DEXs over time. So let me share this right now. Yeah, so
enable this.
right now it's about 75-25. So 75% of DEX volume goes directly to the DEX rather than through aggregators, which is still pretty high in my opinion. But it just still shows that vast majority of people will prefer just going to the DEX directly, even if they could technically get a better trade price execution on an aggregator. And DEXs, I think, are like the most fragmented landscape now compared to other types of aggregators. So we've seen aggregators for like options protocols, for bridges, like cross-chain bridges, like now Genie and Gem with NFTs. But I think like the vast majority of the volume will continue to like go directly through the projects.
Which is really interesting, actually. You would think that people follow like kind of a efficient market. If you look at the concept of like the Homo economicus, or however it's called in English, so the rational human being who just like decides optimally in every situation, and that indeed does not seem to be the case.
Yeah.
But do you see with the rise of so if like it's kind of a hen and egg problem here, because like right now nobody really has to go to Gem to get the best price. But in the future, maybe if LuxRare would have caught on, or I think SudoSwap is also trying to like build, or like SudoSwap is building a competitor to OpenSea, and maybe in the future, when those will have adoption, then it might make sense to go to Gem. But currently, it's basically we are stuck in a hen and egg problem. Is that kind of your perspective as well?
Yeah, like aggregators make sense if there's like multiple different venues to do your NFT buying and selling. But right now, it's they're positioning themselves as like just kind of better trade execution features. But that's all routed to OpenSea.
Yeah, all right. So pretty much that end in the conversation. It's like nothing to discuss here really. Maybe if we take a step back from all of this very micro or like very focused view on like OpenSea or like the or the DEX market or whatever. So if we take a step back and take a look at crypto as a whole, where do you think we are right now? Undoubtedly, we've seen that crypto is kind of mainstream now, because like we've seen all the Super Bowl ads, and FTX is buying arena names like crazy in the US. But what are we really building here? Is this just a giant casino from crypto traders for crypto traders, and now we get some normies or non-Web3 native people joining the fun? Or like what's your stance on this?
Yeah, I think like the immediate use cases, like the first like product, like the first users of like a lot of these crypto use cases will be like speculation, and mainly because like speculation is a good way to like bootstrap an early community, and as the industry and community matures, then that's when it expands beyond just like pure speculation use cases and into other stuff. So like we can take like DeFi an example, where DeFi really took off like during DeFi summer, where people were just speculating on like pool twos and like these like 1,000,000% APYs before like you get rugged by impermanent loss. But now DeFi's matured, where you're having institutions like funds that are putting in like tens, hundreds of millions of dollars into DeFi to earn yield. So it's matured beyond speculation into like kind of an alternative to existing like TradFi, like money market accounts, where you're getting like 0.05% like at best on like your dollars. And that's kind of been the trend throughout the past in crypto, is you have this like early core community of users, and then who are mostly interested in price and speculation. And as that expands to like more normies, then that's where you get to see like more normie mainstream use cases. But it just it takes a while for the crypto community to grow in that sense.
Yeah, I see.
Yeah.
But isn't in like you're saying that legit hedge funds or I don't know wealth management whatever, they're using crypto now to get better yield. But isn't that
Yeah.
also some kind of speculation because it's on the back of speculation? There's still people. The yield has to come from somewhere, right? And it's always
Mhm.
somebody's buying these tokens, and the wealth funds are just mercilessly dumping, like they're farming the tokens and then dumping them for more US dollars. So it's still kind of built on speculation, right?
In a sense, yeah, but like the risk has like gone down significantly because these hedge funds aren't like farming pool two and doing those kinds of stuff. Yeah,
Yeah, okay, I see.
it's I guess like Curve is a good example where they're LPing stable coins and then earning trading fees, and you can argue that the fees come from speculation because when people are swapping stable coins, but they're still earning their yield at the end of the day.
Yeah. Yeah, Curve is actually a real good example for something that doesn't really rely on speculation to work. Uh,
Yeah.
the curve yield would still kind of be there if there wasn't any curve token emissions, although the token emissions are a big part of it now. And yeah,
Yeah.
Uniswap v3 LPs to some extent as well. So you
Hmm.
can probably earn some good yield there as well. Okay. So do you think NFTs are actually the first real world use case of this whole blockchain space? Because it's literally like it has like it's the birth of a new industry, really.
Yeah, the phrase we like to use internally at One Confirmation is like DeFi is crypto for elites and NFT is crypto for normies. It really does kind of make sense because like I'm sure you had this experience where like you're explaining crypto to your friends or your family members, and it's just easier for them to like wrap their heads around NFTs. Like, oh, this is like an art, it's like some collectible, but it's like on the internet. Versus like what's a derivative, like what's a swap, what's an option, what does liquidity mining or impermanent loss mean? This is like too much jargon with DeFi, and like that's like also why like the mainstream media and press, and you see like celebrities getting into NFTs like much faster just because it's like art culture, and these are just things that uh, everyday people understand.
Yeah, I had to take an entire like finance lesson, history lesson, whatever. When I started in DeFi Summer, I was like, oh, what is all of this? Like, what are options? What is a derivative? Like, why? How does liquidity? Yeah, it was a trip. So yeah, even for like me being kind of crypto native, like all of this like very financial technical stuff was pretty hard to grasp.
Yeah.
So yeah, I definitely see that. How many users do you think we have picked up with all the NFT stuff? Since
Um,
I think Bored Apes or like Meebits was pretty much the first NFT hype wave.
Yeah, there's actually on the Dune dashboard, there's like the total number of like cumulative number of addresses. So OpenSea has like 1.3, just over 1.3 million addresses that have done at least one trade on OpenSea.
That's
Um,
actually not as much as I would have expected.
but these are people who've like actually executed trades, not just signups. So it depends on like is how you would count users.
Yeah, but
And then like
if
when Coinbase announced their NFT platform, I think they got like 2 million signups immediately. But like signups obviously are different than like users who actually like do something.
yeah, do you have any alpha on if the Coinbase NFT market will be on chain or off chain? What do you think they will decide to do?
I don't know actually. I don't have any details in that.
Yeah, but I think we would both be in very much pain if it would be off chain because then we couldn't do nice charts like this
Yeah, yeah.
to see how they
It's
stack
all
up,
opaque.
like how the volume stacks up and how the users stack up and everything.
Yeah,
It would be very painful. I really hope for a custodial but on-chain solution, but we'll have to see how that transpires.
yeah.
Um,
Um, oh, the interesting thing in this Dune chart, I just checked the Polygon numbers. Yeah, Polygon has over 1 million now, which is not surprising because like the fees there are cheaper. So like Polygon's grown very quickly in terms of like number of addresses that have used OpenSea on Polygon.
Yeah, this looks like a very bullish chart. I think it's also it would be interesting to analyze the average trade size on or median trade size on OpenSea on Ethereum and OpenSea on Polygon, because I think stuff on Polygon is just in general way cheaper. And there,
Yeah.
like you might buy an NFT for $5, and if it goes to $100, you've still made it 50x, which is
Yeah, you could actually do that now if you like just do the volume divided by NFT sold.
yeah.
Let me do that now. So it's on Ethereum, it's about $1,750, $1,750 on Ethereum as of this month.
Yeah, we are all way too rich.
Yeah. So that's like I guess ETH is down. So it's like what point? How much is ETH now? It's like 0.7 ETH ish. Yeah.
Yeah.
Okay.
Polygon, it's probably
So it's clear that like whales and crypto natives are like dominating a lot of the volume.
Yeah. So the real world impact pretty much so far, to summarize this whole like where is crypto at the moment, you're saying that we have some kind of adoption in the DeFi market. I don't like I think there was some like there's AG euros now, and there's obviously stablecoin dollars. So stablecoin euros, stablecoin dollars. But I don't see that any forex traders are using it yet. All like except for the very crypto native people.
Yeah,
So I
except
think,
for like the trading funds like Jump Crypto or like things like those that have like that have gone into like crypto more from like arbitrage strategies. I actually have like a pretty good insight into like institutional adoption from one of our portfolio companies, Nexus Mutual, because basically like a lot of the family offices, institutions go to them first, and they like basically ask them for alpha of like where can I get the best yields in crypto, and like as a finder's fee, they'll pay them like 2.6% in like premiums to like insure their deposits. So like that's where whenever you see like Nexus like $40 million cover purchases happening on Nexus Mutual, like that's where those purchases are coming from.
that's very interesting. That's that's really cool. I'll have to take a look at the. Go ahead.
Yeah, they turn in from like a insurance like protocol to like basically like a broker like advising like their financial clients like where you can get the best yield and just pay us a little fee for doing that.
And insuring it at the same time, I suppose.
Yeah, insuring at the same time. Yeah.
Yeah, but that's a really good deal for all sides.
Yeah.
Yeah, that's actually really cool.
Yeah.
So yeah, I need to look at the Nexus Mutual charts, I guess.
Yeah. I also built the Nexus. I built NexusTracker.io, which the funny thing is like I built this in summer 2019. This was like right before around the time of Dune launched. So this website basically exemplifies like what I would have to be doing if like Dune didn't exist, and like Dune's just like saved so much time for me of like not having to like manually pull like the event logs from Etherscan and like having to like parse and clean the data and like create a nice front end.
Yeah. I think a while ago you tweeted, I think when we raised 1 billion, I think you tweeted that you didn't take, like you had the opportunity to invest in Dune and you didn't. What was your like? what was the thing back then? What made you? What made
one of
you
my
decide
worst
against it?
passes. Yeah. It was like mainly caught up with like business model, like SaaS, and like how many people would like be willing to pay for like a data provider, and like what's the total addressable market of that.
Well,
yeah, that was like kind of the thing I got caught up
turns
in.
out, turns out a lot.
Yeah, a lot. Yes.
Yeah. Oh well. Can't get them all, right? Yeah. But one thing I didn't cover earlier, and I'm sorry for bothering you with all these OpenSea questions, but what made you? So you invested in OpenSea in 2018, and back then it was pretty much only CryptoKitties who had some kind of traction on the ETH blockchain, and it was like probably the end. What was it? Early 2018 or late 2018? I kind of
Early
blanking.
2018, yeah.
So it was still kind of the bull market. It was not totally over yet.
It was a few months after the CryptoKitties bubble popped. So
Okay.
CryptoKitties was like late 2017, like December 2017,
Yeah.
when it clogged up the Ethereum blockchain.
So what made you invest in digital pictures back then? I mean, a lot
And
of
like
people must have thought
JPEGs.
like, what
Yeah.
is this guy doing? Like he's just like, I can just right click save it. What was your, like, I don't know, what kind of crystal ball? Like in hindsight, it's really clear. But back then, you must have been, or your like one confirmation must have been pretty alone with that stance, I guess.
Yeah. We actually like published our investment memo from like that time, early 2018, like explaining our. It's always interesting going back and reading your investment memos and thinking like seeing like what your thinking was at that time. Um, but yeah, I remember it was CryptoKitties had their own marketplace and they were charging like 5% commission on their NFTs. And because NFTs are composable, OpenSea was charging a 2.5% commission and like basically price undercutting them. So we thought that was like a really powerful product that like NFTs like uniquely enable as like a trustless secondary marketplace that can like include assets outside of these walled gardens. So that was one, and the other one was just that was around the time ERC 721 standard was invented. So actually, funny, like I don't know if a lot of people know this, but CryptoPunks is actually an ERC 20. It's not as um, it's an NFT, but it's not built on the 721 standard. So it wasn't until later that the 721 standard was invented, and like we thought that was going to be like that was just a new asset class that we have this ERC 20s, which enabled ICOs, which is like this massive asset class, and then 721s was going to do the same thing. We just didn't know how it was going to play out, but it was going to become big.
Yeah.
And then, fast forward a few years later, I would say like a lot of these like 10K PFP avatar like drops are basically like ICOs, just done maybe a little bit more tastefully with like some nice pictures to look at rather than just like some price charts.
Yeah. And white papers. So many
Yeah,
white
and white
papers back in
papers. Yeah,
2017. Now it's like
yeah,
it's the roadmap.
yeah. The roadmap. Yeah,
Yeah.
yeah.
Did you think it was gonna take this long for this to transpire? But like your thesis was probably it's gonna explode in the next like hype bubble cycle. Is that
Mm-hmm.
kind of, or maybe that's not even how you think. So tell me about how you thought about that.
Well, yeah, it's really hard to like predict timing on these things. Like the benefit of being like a long-term VC fund is like you can afford to be patient. Like for OpenSea, like we had to be patient for 3 years. Like when even like DeFi summer exploded first before NFTs, so it felt like that NFTs like missed out on that like hype bubble. Um, but if you have conviction in a good product, in a good team, usually like that conviction works out in the end if you're just patient enough and able to wait.
Yeah. Yeah, it certainly must have been a very good investment.
Yeah, more or less.
Yeah. So yeah, I was gonna ask you like, is there anything else that you see emerging as a new asset class? But that's probably the secret sauce to your
Yeah,
success.
new alpha.
Yeah.
Um, oh, I will say a few. Like a big thesis of ours is verticalized NFT marketplaces. So the analogy here would be like OpenSea is kind of like Craigslist, and like when you see the unbundling of Craigslist, like each link on Craigslist is like $1 billion company. So things like Uber, Airbnb, Zillow, these are all $1 billion businesses. And a thesis of ours is like the total addressable market of NFTs is going to become large enough that music, photography, metaverse real estate, fine art, all of these are going to become $1 billion like asset classes and businesses. So we've been like kind of leaning in and trying to back the marketplace leader in each of these specific verticals. So we've backed companies like Super Rare, Catalog for music, Sloika for photography, and MetaHood for metaverse land. And I'm sure there's more that's coming soon.
Yeah, I see. That's really interesting. Yeah, the sentence about Craigslist is really interesting because you're really seeing it around you in like in real time, pretty much. Like new companies are springing up all the time. So that's so smart. um, where was I gonna go? So yeah, basically, the whole thesis there is because like OpenSea is a one size fits all model, and we are already seeing OpenSea kind of hit the borders of that, and yeah, they have to do all the categorization, and then also like maybe the user interface or the user experience on OpenSea doesn't really fit to the product that you're purchasing. If you're purchasing like a really like high class art thing, like it should be a different experience than when you're buying a 10K PFP NFT collection.
Yeah, exactly.
Yeah, okay, I see.
Yeah. And this goes back to my earlier thesis of like how like search and discovery is the most important thing for an NFT marketplace. And when you're one size fits all, it's hard to offer a better user experience if, for example, you're purchasing metaverse land and like you need to have a user experience that's kind of like Zillow, where there's a map and you can see like where on in Sandbox you're buying your land, and like on OpenSea like they just don't have that feature because it's a generalized marketplace.
Yeah, I see. Yeah, you basically need to use external tools
Exactly.
to like make the connection and then buy on OpenSea. It's just it's not okay. I see. Yeah, so maybe I haven't asked you yet, and it's always a question, but it's gonna lead somewhere. How like how did you get into crypto? Like what was the story there?
Yeah, so I got into crypto back in school. So I co-founded the Stanford Blockchain Club back around like 2017-ish. And I got into it. So I was doing a lot of research, like Dan Bonnet's PhDs, and like getting really into cryptography, game theory, mechanism design. So I got into crypto more from like the academic technical lens, and like blockchains and crypto just kind of cryptocurrencies happen to be the real world use case of cryptography, is like the way I like to say it. Yeah, so that was like my first foray into crypto.
Okay, so you're coming from the technically interested perspective.
Yeah, although I've definitely gotten less and less technical over time, though. Dune SQL queries have like at least kept my technical chops at least somewhat in shape.
Yeah, you can you can
You're good
just
enough to do SQL queries, I guess. Yeah.
I'm
And
a
maybe
coder.
build a couple websites.
Yeah, interesting. So yeah, where I was gonna go with that, this was not the answer I expected. Because we see a lot of talent flocking to crypto at the moment. So what do you think are the key value, or like what makes crypto so attractive to work in nowadays?
You have a lot of leverage and autonomy in what you're doing. And the crazy, like one of the crazy metrics I like to look at is like total value locked divided by number of employees. And like for project like Uniswap, it's like pretty insane. Is like if you're an engineer at Uniswap, like each line of code you write in like the smart contract has like carries so much like financial like value. And like that's just like something you can't get elsewhere, like when you're working at Google or Facebook and you're just like building some very small part of the stack. You don't have such an outsized influence. So I think a lot of like Web2 talents getting into the space because they want to have more autonomy in what they're doing. And like and like that's like kind of on the engineering side. And then for like the financial people, is like oftentimes people work in TradFi and like their boomer partners like don't understand crypto, but like they're spending all their nights and weekends like playing around with Dune, or just like living in Discords and Reddit and like crypto Twitter. And they're just really excited about this because it's just like it's like a once in a generation like wealth transfer like to people like who grew up in internet culture and like understand like online communities. And like that's why a lot of young talent is like really excited about crypto and is moving into this space.
Yeah. So where should one start if he wants to get into? Like, I guess people who are watching this are already kind of into crypto. So maybe better question: how to become a Dune Wizard? What would your suggested steps be? write
first
write a
learn
bunch of
SQL.
DMs to Frederick.
Yeah, or to me as well. I get quite a few DMs as well. Yeah, learning SQL, it's actually like not that intimidating. There's like plenty of like online courses to do so. There's also like I think Dune, you guys also have like a boot camp for learning SQL. I actually think the easiest thing to learn is just to fork like existing queries and just play around with them. And just like from getting your hands dirty, like forking queries and playing around, like you quickly pick up like how to like work your way around the tables and like putting together data stuff. And also like if you build good stuff, then like you can build like a very like great online presence of like being like a data wizard. And I think like Hill Dobby is like a really good example where he just kind of came out of nowhere like in the last few months, but like built a lot of very useful dashboards. And like now he's like one of the top Dune wizards. I think he just crossed like 5,000 Twitter followers. Like that's an example of like what you can do if you're really passionate about data and like to get your hands dirty and play around with this.
Yeah. And maybe from your perspective, as somebody who's on the other side of the industry, basically, how in demand are Dune Wizards?
Well, projects. There are like quite a few projects. They're like hiring like data scientists or data analysts, and like Dune is usually like kind of like a job requirement at this point. Like that's another thing is like you reach product market fit like when you become a job requirement. I think Figma is also like a really good example where like now if you want to be a designer, that's like if you want to work as a designer, like you basically have to know like how to use Figma. And I think with like data, it's like if you want to do stuff, anything data related in crypto that revolves like around like open blockchains, then like you have to know how to use Dune.
All right, that's good to hear from you.
Yeah.
Yeah, this has been great. I'm kind of running out of questions, so let's take a look into the chat, and maybe is Thomas here? Thomas, are you there? It's a rug pulled.
Yes, I'm here.
Yes,
Okay,
hello.
great.
Hey. Great conversation, guys. Awesome. So yeah, we got a few good questions. First one is from Given Malangu. I'm sorry if I've butchered the pronunciation of your name. And his question is, aside from using data analytics, what other KPIs do you consider as a VC when making investments?
What are the KPIs? Well, I guess it really varies depending on like the project. So if you're like a money market protocol, like TVL is like kind of a North Star metric. If you're a marketplace, then it's like volume. So in our investment memos, like we track like one North Star metric per each of our portfolio companies. So it really depends on the project, I guess.
Okay.
And like layer ones, if you believe in like the monetary premium thesis for L1 coins, then it's like number of addresses that are holding like more than say 0.01 Bitcoin or 1 ETH. And like that gauges like the adoption of that coin as a store of value, like number of people who believe that it's a store of value.
Okay, awesome. And this next question, I think, would be good to hear both your answers. This is from Hill Dobby. He said, we have DeFi, then NFTs. Do you see any crypto sector that you think could have a similar explosion in interest and speculation in the future?
Let's see. I think like Web3 related stuff. So like decentralized file storage, social media. I think we're still a couple of years far like out from that. I think like the immediate use cases of crypto will continue to revolve around money, but the building blocks in technology are slowly being built there. So I do think we'll see interesting products building in that space over the next few years.
Yeah,
I think Web3 Discord is an interesting product because there's a lot of interesting things you can do with NFTs as utility, like token gating communities. But like Discord is a very Web2 product, and like they're not focused on building any of these interesting Web3 features. So I know a couple of teams that are kind of working that space. It's kind of using NFTs as like the tip of the iceberg to get into like Web3 Discord related ideas.
Interesting. You have anything to add, Florian?
Yeah, kind of. Obviously, like I'm not as technical or like as well read as Mr. Chen here, but I think there's like the technology needs to scale first. Like it usually like developments happen in very sharp rises, and then basically like the base infrastructure needs to scale up first before we can reach like the next level of productivity. And this kind of feels like we're hitting like productivity plateaus. But even though like if you look at the Solana blockchain or something like that, like a lot of stuff would be possible there today. But if we like look at our base level, like Ethereum, there needs to be a lot of technological improvements, and also like all these rollups and ZK chains and whatever coming live. So I'm not certain about that thesis, but I've seen this reference in the past, and I kind of feel like it fits.
Yeah,
Okay.
yeah. There's definitely a lot of work that needs to be done on like rollups and like all this scalability and privacy technology.
Another interesting question, again from Given Malangu. Given the blockchain transparency enables us to read the data and create metric dashboards, does that mean that privacy solutions could actually be a bug and not a feature?
That's an interesting one. Well, I guess it depends on the use case. No, privacy is like a double-edged sword. Is like sometimes like you need privacy like if you don't want to like dox yourself, but at the same time like privacy is like people use privacy to like launder money. So I guess Tornado Cash is one where you can like the data is transparent where you can see deposits into Tornado Cash, but as a mixer it like de-anonymizes like the inflows and outflows. Although there are like more sophisticated tools that people have built using heuristics to like try to identify like outflow addresses, like map them to inflow addresses. I guess the thing about the blockchain though is it's just a permanent ledger, like storage of like all of the historical transactions and actions you've done. So basically, you just have to like dox yourself, like fuck up once, like dox yourself once, and then the entire like paper trail becomes revealing. And like that's actually how they got the Bitfinex hackers. The couple is they like fucked up once when I think it was like they were trying to cash out Bitcoin into like Walmart gift cards, and like that got linked. And then the like law enforcement just like went back from there and like traced it all the way back to the Bitfinex hack because the data is just there forever.
Interesting.
Yeah, it was like $100 Walmart gift card. Where you're thinking,
Yeah, something like that. Yeah, and
what
they dox
are they
themselves and
doing?
like tied to themselves.
Yeah, it's a really strange thing. I actually don't know how ZK rollups will look like inside of Dune, or even if there's some kind of Etherscan that will be able to track what's happening inside of rollups. Because like if we still get event logs, but de-anonymized event logs, we could still produce like overall metrics, and I would think that is the case. But I'm not certain. I haven't looked much into ZK rollup technologies yet. But I don't think it will be totally opaque. Like it won't be like a total black box.
Yeah, so there's a difference between just to clarify, there's a difference between ZK rollups and ZK rollups. So ZK rollups is just like a scaling solution of like batching transactions into some proof. And then ZK rollup is adding privacy, zero knowledge privacy on top of the scaling solution.
Okay.
So we're still like I think a bit far out from like having like pure like privacy and anonymity on rollups. But like with the current scaling solution, I don't think there exists like any Etherscan like product for like StarkNet or ZK Sync, but I mean there will be in the future, and that's definitely something that like Dune can figure out how to like parse the logs and traces.
We'll try.
Yeah.
All right, I think that's it for the questions, but really interesting answers.
Cool.
Sag. Yeah, Richard, it was great to finally get to talk to you, to see the man behind all the greatest Dune dashboards. I think
Yeah.
your OpenSea dashboard is by far the most clicked dashboard on Dune, like by a big margin.
And most starred until someone else figures out how to buy a bunch of stars.
Yeah. No more. We'll take
Yeah.
care of that now.
Cool.
Yeah, it's been a pleasure. Keep building cool stuff on Dune. Yeah. Thank you so much for all the cool work and like also adoption you're driving through these great dashboards. It's great to hear the perspective of you and that you're using Dune actively all the time. Yeah, thanks so much for coming on, and yeah, see you next time. Bye bye.
Great. Thanks.